Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, July 29th, 2010. Well, a wild day on Wall Street today. Volume is not tremendous, though. I want to make that clear. Volume is only 130 million on the SPY as it's about 2:15 p.m. Eastern Time. That is very, very light, but the volatility has been intense with the market gapping higher, reversing to the downside, getting slammed down where the Dow is down more than 100 points, and now reversing to the point where the Dow is just down slightly on the day. We right now see the Dow down 34 points, NASDAQ down 14, and the S&P 500 down about 6. That's only about 1/3% to 0.5% down on the day, but the key is to recognize the volatility. A gap up of this all the way up into this key breakdown line, which I'm going to discuss shortly, a reversal, and then another big bounce here. Markets consolidating in a slightly bullish manner right now. You can see the green candle already starting to the upside, which again we'll have to watch to see if this continues to move up or it fails and moves back to the lows of the day. Now, the real kicker is what is causing the volatility here. What's caused the market to sell off? What caused the market to rebound? You have to look at the cause of the sell-off being pure and simple technicals. We got some economic data out this morning at 8:30 a.m. Eastern Time. In fact, we got the jobless claims number, which was not a great number. It came in above 450,000. Any number above 450 is looked at as being a non-event or a negative. Any number below 450,000 at this point is looked at as being a positive as it creeps towards that 400,000 level. So again, a slightly neutral to negative number, but the futures still stayed higher. We were still up 8 points on the S&P futures before the market opened. So again, that can be shook off as a non-event at this point. And again, looking at the market here, the key was pure and simple technicals. Now, what do we mean by technicals? What was the key sell-off signal here? The gap up today gapped right here above this key white trend line at 111.50. It moved up into this next white trend line at 111.75, but the real reason why this sell-off began was a retag of the breakdown line from yesterday. And what I'm going to do here is I'm going to shrink the chart down a little bit more so we can go in depth. Take a look at this level going back all the way to last Friday, the low on last Friday, make that Monday's low, the connection to Tuesday's low. And again, on Tuesday, we talked about this in the nightly video to our premium members, saying that should this line break, this market would sell off to the 200. At that point, you would look for a possible bounce in the market. Sure enough, we did get that bounce. But notice again how if you connect the lows going back to Monday afternoon to Tuesday all day long, you get a little bit of a trend line sloping up underneath. Now, this trend line continues all the way out, and that's what came into play today. But again, on yesterday's morning, again, if we go back to Wednesday morning, the breakdown occurred. The market slammed down, got a bounce off our trend line back here, then slammed down all the way to the 200. At that point, target initially was reached. What do you expect off the 200? You should all be expecting a bounce. The market did bounce, and at this point, the gap up today took us back to the breakdown line. For those of you that are premium members and understand the methodology and are members of the Research Center and Intraday Stock Chat, you know that oftentimes I'll tell you, don't necessarily short the breakdown, wait for the retrace and get the retrace short. Because oftentimes what you'll see is a retrace to the level of the breakdown line, and that was happening this morning right on the open on the first push up, and at that point you short. If you had shorted right there, and again, this was called out in the intraday stock chat, you would have yielded a huge drop all the way down here. Basically the SPY dropping from 111.75 to 111.80 all the way down to 109.40. All right, that is a huge drop of $1.40 on the SPY from the gap up. Since the bounce, again, you can see the bounce coming back in now, a little bit of a retrace pullback into the 20 moving average. But again, notice that. I can't stress that enough how big of an event that was to retrace back up into this key trend line right here and then reverse to the downside. Okay, so that's the big technical side of the market here, why the market sold off. You ran into a major sell signal right here. Also, you have people still kind of worried about the economy. The dollar actually started to rebound. The dollar gapped down today, which is another key thing why the market's gapped up. Again, we can talk about, and I've talked about to our premium members, how the market goes inverse to the dollar. If we take a look at the dollar, you can see on the daily chart of the dollar, we're going to flip up the daily. The dollar has actually fallen over the last month or so. What has the market done generally over the last month? The answer everyone should be saying, especially if we look at the SPY daily, which mirrors the S&P 500, the market has had a beautiful rally over the last month. So you can see clearly how the inverse move in the markets is related to the dollar. The dollar moves down, the markets move up. So what happened today? If we go back to the dollar again on an intraday basis, you can clearly see you came into a major support level right here at the lows on the dollar near the open, which happens to be the 200 moving average. Now again, the 200 moving average is the king of all moving averages. When you hit it after a long period of being away, you expect a short-term bounce. Now intraday, we came down, we kissed it intraday right at the open, and then the dollar started to bounce. As soon as the dollar started to bounce today, the markets began to sell off. All right, again, so you can see that inverse relationship. Now, the market's really started to tumble down. It seemed again that trigger on the technical side of the SPY chart of that retest of the trend line really catapulted the sell-off, plus the dollar bouncing helped, plus worries on jobless claims probably came back into effect. There were a lot of little keys here that were in play that caused this market to reverse to the downside. But again, the question is, with volume being so light, are we going to see any substantial downside, or is the market going to slowly grind back up? Now, again, we talked about the in spirit of bullish pattern right here, and again, you can see the market moving up a little bit. That is expected to generally continue today in the afternoon session as I go back on the microphone in the intraday stock chat. So keep an eye on that, folks. Now, a couple other plays I want you guys to watch. Well, first of all, if we take a look at oil, even though the markets are lower today, oil is higher. So oil having a little bit of a nice day here. Even though it's off the highs of the day, you are still seeing the USO up 68 cents. In addition, I continue to believe that nat gas is on a breakout course here, having broken out yesterday, then it ultimately pulled back and has continued to make a move up today. We had nat gas inventories, natural gas inventories. The UNG is the ETF for natural gas. I don't necessarily recommend that as a buy, although it is a play, one way to play it. But again, I think some of these small caps like NGAS or LNG are probably the plays that are on the dead lows of the charts that look for a little bit of a move up. And those are the ones that I'm really watching. And again, those in the research center know, and in the intraday stock chat as well. If you take a look at the NGAS here, NGAS, you can see beautiful little base created here. And with nat gas breaking up, eventually it should catch fire. If it can get through this 50 moving average, I expect at least to move up to here, and then possibly, ultimately, at least to move up into this range. If it got through there, you're looking at basically a move to the gap fill at near $1.50. So again, a lot of upside potential in my opinion on this NGAS, NGAS Resources. And again, the key is going to be it's got to get through that 50 moving average on the small cap. It's a small cap, traded about 200,000 shares today, which isn't that bad for volume-wise for a small cap. But again, keep an eye on that. And again, that's all based, if you take a look at this stock chart, which is the Nat Gas, the NGAS Resources stock, and then you compare it to the UNG, which is the Nat Gas ETF, you can clearly see a move up here, consolidation, and then finally a breakup. And that's your breakout right there. First target really you're into right here. That's the little pivot high. If you get through there, you should go at least right to here. Ultimately, I think you're going all the way up in this range to the 200 moving average, and that would be your short-term target, maybe over the next week or two or so on the upside. So again, if that continues to move, I do think that NGAS makes a nice solid move. And again, that's a key play in the research center we've been watching and looking at very closely. All right, a couple other stocks in play. JP Morgan is negative, but one of the other reasons why I think this market has rebounded off the low, not only the dollar coming off the lows of the day and kind of stabilizing and coming back in a little bit afterwards as well for the bounce, but you can also look at Goldman Sachs. Goldman Sachs is having a very, very good day today. Look at this stock. All right, it's no coincidence that Goldman Sachs has started to rip up over the last hour or so in the market. And then if you compare that to the SPY intraday, take a look at that. The bounce is generally coordinated with that Goldman Sachs move up. And again, Goldman has such a powerful move like that. It's a leading stock or a leading indicator for the overall market and tells us that the market probably gets a bid. Please note again, upward move, a downward consolidation into the 20. Look at the bounce you're getting. We just talked about that a few minutes ago in the beginning of this video as being a bullish pattern for a bullish move, and sure enough, you are seeing that bullish pattern play out. And again, the scalps were great today, folks. I can't tell you. We shorted up here. This was our first short of the day, made some good money. Then we came into this little green trend line, bought the green trend line for the bounce, beautiful bounce there, bought this trend line for a little bit of a bounce as well, and then again, as you came down to the 200, get a little scalp there, and again, each level right here, you can see the first pierce right here, resulted in a beautiful bounce. The scalps have been great today in the market. And again, off of this in spirit of bull flag, calling out a little bit of a long, and you can see that is paying dividends as we speak. So the scalps have been there on the SPY. This is what we trade intraday along with stocks, commodities, you name it. We talk about the UNG, we talk about the USO, oil, we talk about the dollar. It's all there in the intraday stock chat. And again, for the taking, if you're an intraday trader, even if you're not, it's a good quality, interactive type environment for people to ask questions. We answer questions all day long while making calls on the market, educating, and so forth. Research Center is also a key to make tons and tons of money. And again, we continue to hold some Chinese plays all in the money right now on the Chinese plays and a couple other small cap plays out there, as well as looking at a couple large caps for possible plays should the market come to the right level. All right, folks, that's all for today. Enjoy. I will talk to you tomorrow, as always. And again, join the Research Center to get the nightly video, which is 30 to 40 minutes in length, along with the daily market report, pro trader watch list, and of course the hot charts and alerts and other things involved. $49.99 a month. We'll see you there. Take care.